Happy Friday, traders. It is 8 a.m. Chicago time on Friday, the 18th of November, 2022. This is episode number 2361. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. There's a lot of news chatter right now, so there's a lot of noise in the background, especially talking about oil, and oil is just really slipping right now. It's pushed through the last bottom at 80.71 and is through the gaps, pushing through the gap to oil down 3%. But I want to start out today a little bit different in that I want to do the where are you located. We haven't done this in a while. We used to do it every other Friday. Please type in what city, state / province, if it applies, and country you're at. If you want, you're free to put on your Instagram or Twitter handle. Please don't share your phone number or emails because these are going to be harvested by robots and you will be spammed. So no emails, no phone numbers, but you can put on your Twitter handle, your Instagram handle, whatever handle you want to use, Discord maybe, so others can find you, others in the area who might be interested can find you. I believe it's relatively safe to do that. Thanks for participating. I want you to take a moment to look at the list here on the live chat. If you're on Twitter media, unfortunately, you can do the same, and there may be, I believe it has a chat functionality. There may be people you can look at there, but we'll see. And speaking of that, who the heck knows how long Twitter is going to remain? They shut down their offices today and locked out their entire staff, including themselves. Just a lot of stuff going on there. Seems like some other Twitter-like tool or service probably is going to come online, as this has been a disaster. Let's jump into the pre-market summary sheet from Convergent Trading this morning. The market is in a risk-on sentiment. Look at those indices, all strong this morning. We had a strong pop at about 3:30 Eastern or so, as Russia's foreign minister said that they're ready for strategic stability meetings with the U.S. to talk about Ukraine and to talk about, de-escalating. So the market responded very well to that. Crude, I think, is still responding to that. Remember, crude coming online. The first thing that's going to be facilitated is energy out of Russia because Europe depends on it still. And so crude is taking a pretty decent hit. Look at crude down 3% today. It wasn't just a few days ago that it was trading in the 90s, and now it's at 78. So hold off on fueling your car, will you? Also, North Korea launched an ICBM that is capable of reaching mainland USA. We'll see how that works out for them. ECB President Lagarde says the ECB will raise rates further, withdrawing accommodation, but that may not be enough. China's easing on climbing case count. They're easing their COVID restrictions on climbing case count. Kind of interesting out of China. And more Amazon headcount reductions. So those are the key drivers. In terms of the calendar, what has driven us this morning is Great Britain retail sales came in really strong for October, 0.6% versus negative 0.1 forecast, 0.3% consensus. In either case, they're strong. Retail sales ex fuel also strong. And again, Lagarde came out at 3:30 a.m. Eastern. And then since then, we've had Canada PPI incredibly strong, 2.4% versus 0.3 expected. PPI year on year out of Canada came in at 2.1% versus 7.8 expected. Really strong PPI numbers out of Canada. This morning, Feds Collins released some comments. You can look those up. And then what we're looking for the rest of the day are existing home sales in the U.S., looking for about 4.3 million units for October, um, and a decrease of 8% month on month. And then the CB leading index also at 10 a.m. BOE's Haskell at 12:15. The Baker Hughes rig count rounds off the week, and we are done. The other thing you should remember is that next week is U.S. Thanksgiving. So a lot of people are going to take Monday, Tuesday, Wednesday off. A lot of at least schools here in the U.S., in Chicago, have Monday off for report card day, and so the parents are likely to just take the 3 days off and have a whole week off, essentially 9 days off or 8 days off for the cost of three. Pretty good Black Friday deal there. And it's likely to be a slow week. So just come in with some expectations that that's likely to happen. Know that there's a lot of traveling that starts today, Friday, for many people. So just take that into account. Looking at the overall lay of the land here, again, indices are strong. Indices finished strong yesterday. After I left, I had to leave early yesterday, unfortunately. But indices finished relatively strong. I haven't looked yet, but I don't think we did very well on those event contracts yesterday, although they were in the money for quite some time. I ended up buying puts in the money on the event contracts, the CME event contracts, and they were looking good, but I think they settled. We'll put out to EdgeClear. We'll put out a summary of that today. But overall, keep an eye on that crude. Crude is not responding to a dollar repricing because the dollar is hanging in at 106.5. It was at 107 yesterday. So this is more geopolitical, in my opinion. Probably a supply-based repricing or revaluation. The S&P is in a trend up mode. The auction is trending up very methodically. We've been building value overnight as we've moved up. The point of control is near the high of the range, where the point of control is 5 points away from the top at 39.89. So we've brought the point of control all the way back from the I think low 3900s yesterday to 3990 basically. So we're seeing a bit of a reversal this morning. So we did push into some significant landmarks yesterday, and we'll look at that in a minute. Here's what I talked about yesterday. Yesterday, we were opening in a gap down out of balance. This is just a very, let's change the pen color. You know what? I'm going to set up a separate scene for this, so I don't have to keep fiddling with these pen colors. We moved out of balance on Wednesday, just completely consolidating market. It consolidated inside of Tuesday's range, and then we sold off yesterday, opening in a pretty big difference to the settlement price, about 50 points from the prior settle. Very low probability that the gap would get filled. That's the expectation. And then what I was looking for early on, if you recall, I was looking for a pushback to the full session VWAP, essentially looking for it to come back towards that 39 area. So I highlighted a couple of things here. 39 from yesterday, and just above the 40 area, 45 or so. And I was looking for, in either case, it doesn't matter. I was looking for a retest of VWAP, and then for the market to turn around and push into the 39.10 through the 3900 to 38.90. And if it does that, we would have a big selling day yesterday. That's what was expected. We had support from the relative delta. I spoke quite a bit. You know, if you've been wondering how the cumulative delta is used, at least by me, Watch yesterday's Trader Bite. You can find it on YouTube. Just search for Futures Trader 71 and you'll see yesterday's Trader Bite. And I talk about how yesterday's market, it was controlled by the small lots and that they were trending down. So we expect a response, and the response would be back to VWAP. Traditionally, that's what it does. And then we would expect it to turn over. Here's what actually happened yesterday. Yesterday, we open up all the way down here at 39.17. Remember, the prior settlement was way, way higher. And then we immediately push up, and where do we go? We go right to that VWAP. You could see the tag of VWAP at that point with the volume coming in. VWAP gets dragged. You could see almost vertically here, gets dragged pretty dramatically when the U.S. opens because there's so much more volume coming in, especially market on open volume. As soon as we open, it drags that VWAP down. We ended up meeting that with VWAP at 34 instead of 39 or even higher. It doesn't matter. We still got the VWAP trade all the way back to the open. The expectation, if you recall, is respond to VWAP, then roll over, and then push. Look at the low, 39.1375. We're looking for 39.10. Yesterday is the first line, 38.90 is the second line. And then if you recall from yesterday's show, 77.71 were the next key targets down. We end up not getting to 39.10 and then putting in a higher low, then going into this kind of sideways trade. The sideways trade before we catapult up. We have a very significant impulse move higher. This is my active chart, my active trading chart, which is a 1 tick by 8 tick point and figure. So once we see this impulse here, it becomes about looking for pullbacks. The impulse high is right in here, comes right back to it. For continuation, and in that to that vein, we would look for the gap fill, which is prior low a day. The prior low a day is right there at 39.62. It got to 39.62 and a half. Look at the precision with which this market's move came in. It tried to get into the prior range. It could not hold. Lower high. Now impulsing down. You have to be really attentive to trade these. Impulsing down. So now we're looking for a pullback continuation trade back to the IB high, which it did. It dipped below the IB high and came right back to mid and kind of finished strong. It finished above the strike, the put strike that we bought yesterday on the event contracts of 39.50. So I'm guessing, I haven't verified it, but I'm guessing that the ES trade lost money, probably around $15 or so. So that's where that stands this morning. We open, we flash up sideways, really mostly sideways. And here's your news out of Russia right here. And from there, we've been trending up in a multi-distribution, and we're accepting the upper end of the range. We're accepting that, and we have basically moved all the way through to the high of Wednesday, that consolidation day. So what we've done in the overnight session is we've crossed Wednesday's entire balance range, and we are back in Tuesday's trading. So if you look at this, zoom in a little bit. This is Tuesday. It's a triple distribution profile. This is Wednesday. It was a consolidation at the lower end of the range, and we broke lower, and we found support and pushed right back up into this Tuesday range. So what we've done is we've come right back to this most recent balance. So what am I expecting today? I'm expecting that this is very likely This is very likely to pull back. Remember, we're coming into multi-days of balance here. So if you just focus your eyes on the blue, not the orange, you'll see that the blue traded like this, traded like that, and then traded like that, and then traded like that. So you could see that there's overlap, 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 and we are now on the upper side of that overlap. The expectation is that the 4,000 will create another chance at formidable resistance this morning, and I'm expecting it to rotate back through to 39.80 almost immediately. We are gapping back. We're gapping up back into balance. I expect this to rotate down to 39.80 and then decide the next move. So this is one of those rare mornings where we might get a setup right here at the open for responsive selling towards 39.80. If 39.80 doesn't hold, then we're looking for 39.70, and then we're looking at attacking Wednesday's low yet again. So Wednesday's point of control is right down here at 70. That's why I'm calling it 39.80, 39.70 brings us into the balance of Wednesday, brings us to the low end of the range. So we may spend most of the session between the 60 low and the 90 high within this range. And I'm expecting it to go sideways relatively quickly. By the European close, which is 11:30 Eastern, I'm expecting this thing to kind of go sideways. So what we've seen lately, if the market gaps, it chops, right? So we have a gap here on PPI. What did it do? It chopped. We had a gap down. What did it do? It chopped until this event took place. It just opens in a gap and it chops, and I'm expecting the same, and I'm expecting it to remain in this big trap, this big gravity zone. Or if you're here from way back in 2010 and watched the webinar for a series that I did for charity, this is the tall grass analogy, where when there's a lot of volume, consider the volume grass, tall grass. And if areas that don't have a lot of volume are like concrete, like a concrete paveway or a fairway on a golf course. And when a ball comes bouncing onto the concrete, it bounces through. It retains its energy. When it bounces into the rough, the tall grass, it tends to be absorbed and the ball just rests, right? Just imagine that in your mind. So turn the profile to the left here, turn it 90 degrees, rotate it 90 degrees so that it's horizontal, and look at this area that we're in now as the tall grass. This area is likely to cause churn. This is how volume profiling works, okay? So I'm looking for it to respond. I'm looking for it to chop around a little bit. And as we move into areas with very little volume, like down here, these trending areas, this is where I was saying yesterday, if we break through into that, through the 3,900, we're likely to see 38, 90, 77, and 71 quick. And why? Because there isn't much grass here. The ball can roll and retain its energy quite a ways until it kind of finds balance and then forms, starts to grow more volume and slows things down. This is how auction market theory works. This is the basis of how I've been trading since 2005, late 2004, and it has not changed. There's nothing that has changed about it except for little tweaks here and there, adding VWAP and so on and so forth. This is the basis of what market movement is built on. It's not mathematical. It's nothing more than looking at what the market actually is doing without a lagging indicator, what it's actually doing, and reading how that is relative to what we did last time we were here. So again, we're moving into balance here, and that's what's important. So looking at the big picture, here's your big TPO chart. Remember I said there's just a tremendous amount of resistance up above into that 39, this 3994,000 area. There's just a lot of a lot of volume that went up there, or a lot of time spent, and then we were kind of moving our way into this lower balance. And then yesterday we opened at the low, finished near highs. So this is kind of acting as a reversal day, but I still expect this to work or have a bit of a difficult time working through going up. I don't expect it to run up. It could. The market can do whatever the heck it wants, but the probabilities are on the side that this thing has a lot to climb. And we are right here, this white dashed line, and that's right on top of the MC point of control. So for that, I expect the market to have a reversal this morning. And if we look at relative delta, look at it. How do you like that for a relative delta on a rally? What is this relative delta? For those of you who are students yesterday and listened to what I talked about in relative delta, how do you read this relative delta right now? Okay, so just think about it. We've rallied, but do you see aggressive buyers here? Does this look like aggressive buyers here? This is very likely to rotate over and balance quite quickly this morning. This is very important to monitor here. This information uses MBO data and is very accurate. And it's really, you know, we popped up on the news. We had some movements, large lots and so on. We've popped up on the news a little bit, but overall, we have a market that is completely sideways delta-wise. The delta is practically zero currently on a rally that has run up from 39.43.50 to 39.94. By the way, this is a weak high, so I expect the overnight high to be poked at some point, but I'm not sure if it'll poke it and come back, or if it'll come back, consolidate, and poke it later. Who knows? I don't have a crystal ball, but what I don't see is good participation by buyers while the market's rallying. Okay, so this is a bit of a divergence that we need to account for. Might cause things to be quite choppy. Okay, so that's it. I will leave you with that. I'm not going to draw squiggles on the screen or whatever, but I've given you an outline of what's expected for today, and it is relatively choppy this morning. So I'm going to be monitoring very closely here in the next 7 minutes at the open to see if the market's going to be responsive. It looks like it's trying to be already, and I'm looking for it to push back towards that 39.80 balance area. Okay, good luck. Thanks for putting in your location. Very much appreciated, and hopefully some of you have been able to connect during this Trader Bite. And I'm always looking to build a community. That's what Convergent Trading is about. That's what EdgeClear is about. And thank you for your support. Take care.